Let's get into your stock picks then. I'll start with you, Ricus, AVI.
Yeah, Gary has basically said a lot of the things I was going to say about AVI, and it's quality, consistency of earnings. As far as costs are concerned, I think far less onerous than it has been over the past year or two, specifically with what looks like a pretty decent planting season. So at least the one aspect of the cost inputs will be far less damaging than it's been in the past. They are sitting historically, we've compared historically at a pretty decent price, and it hasn't been in a long time.
Mm-hmm.
And more than that, that whole sector, whether it be Tiger Brands or any of the others, I think there's a positive outlook on this sector as well, which will also add to the positive price momentum. And I see a target price of around about 115 Rand plus a dividend of around about 5%. That still is a 15% gain from current prices.
And what about you, Gary? Where are you seeing value at the moment?
Yeah, so I'm going to go with one of our. So really for me, it's retail and banks are two sectors that I think in the South African market are looking very, very interesting. So this actual stock pick I'm going to go with today is going to be Mr. Price. So we had interims out recently. I mean, revenue up 5.4%. Like-for-like sales also up around 5.3%. Earnings per share up 6.5%. So nothing really to write home about. But you did get a little bit of a kicker in the share price as those results were released. It was a lot better than I think people were expecting. Now, yes, they kind of highlighted the South African consumer is under a lot of pressure at the moment. Times are obviously tough in the local economy. I mean, even for an omni-channel value retailer like Mr. Price. But I do think that we're starting to feel the ship turning in South Africa, and we can feel it. I mean, load shedding seems to be something in the past. I don't know whether it's going to come back or not, but that's a massive kind of benefit for so many businesses and so many consumers. We're off the grey listing at the moment. We've had our credit rating at S&P Global raised by 1 notch. We've had our inflation target, reduced, sure, but I mean, we have our inflation under control at the moment. This probably means lower interest rates longer term. Our currency is pretty strong. So looking at our local businesses, and Mr. Price is one of them, which is kind of down at a technical level. It's not particularly expensive for a South African retailer. If I look at it, if we look at like a 1 year forward at the moment, you're probably trading, 13.5 times earnings, expected earnings at least. And if we do see the narrative around South African investment coming a little bit better, typically the retailers benefit from international foreign portfolio flows. So the foreigners come in and buy up our stocks, the likes of Clicks and Mr. Price and Shoprite, and all of them will kind of probably command higher multiples as well, even if you don't necessarily see massive earnings increases. So that's it. So that's kind of Mr. Price, but like I said, also financials as well. If you look at something like an Absa Bank, I'm going to give you 2 stock picks today. Look at Absa Bank. I mean, this is trading on kind of 6 times earnings with call it 7 times earnings with a dividend yield of 7% for one of our major banks. It's just too cheap. I think SA Inc. in general is maybe a little bit cheap at the moment, and there could potentially be a re-rating higher. That's why I'm going Mr. Price, Absa, maybe Nedbank.
Gary. One stock pick. SA Inc. basically. All right, gents.
SA Inc. is my stock pick.
Yes, let's leave it there. Thank you so much for joining me today. Gary Booysen from Rand Swiss and Ricus Reeders from PSG Hole in One Ruimsig. And that's all from Stockwatch. But do stay tuned for lots more coming up right here on Business Day TV.